Hello, we come back, my student, to analyze cash flow statement. As you know, my student, there are many ratios that can be used to analyze cash flow statement, but I want to select for you the following four ratios. The first ratio is financial liquidity ratio, which equal net cash flows from operating activities over average current assets. This ratio measures the company's ability to pay its current obligations from operating cash flow. The healthy ratio for this ratio maybe around 1 to 1. The second ratio is the flexibility ratio, financial flexibility ratio, which equal also net cash flow from operating activities over average total assets. Also, this ratio can measure as flexibility is flexibility to adapt with contingent liabilities. The third ratio is capital expenditure coverage ratio, coverage expenditure coverage ratio, which equal net cash flow from operating activities also over capital expenditures. This ratio measures the company's ability to finance its capital expenditures. We talk about capital expenditures, we mean that acquiring new long-term assets like purchasing or acquiring lands, buildings, and so on, and capital expenditures paid on them. So this ratio measures the company's ability to finance the capital expenditures without outside sources. This ratio will differ from stage to stage of the life cycle of the company. The fourth ratio is the free cash flow ratio, which equal net cash flow from operating activities minus capital expenditures and minus cash dividends. Okay, now we can apply these ratios in the following example. We have information about current liabilities, current liabilities, and total equity, net cash flow from operating activities as important number, net cash flow from investing activities, and we need the components of the investing activities to know how much we have capital expenditures through purchasing long-term and long-term property, plant, and equipment. The first ratio would be 187.5%. The second ratio would be 88%. Capital expenditures, capital ratios would be 136%. The fourth ratio, we will have positive and free cash flows is $10,000. Now you have homework for you. You can solve it, and if you have any comments or questions, please contact me via Blackboard email.